revolving around group accounts. And when we were looking at group accounts, we concentrated on the balance sheet, the statement of financial position. Now, assets and liabilities are basically cross-cast between the parent and the sub. And when we do a group balance sheet, we have a lot of structure. We have a lot of routine. We know we have to sort out the net assets to get the fair value adjustment. We know we have to sort out the net assets to get the post-acquisition. We know we have to sort out the net assets so we can get the NCI, the retained earnings, the other components of equity. We know that we have to do goodwill. If there's an impairment, we can use the net assets at the date of the impairment review. We have to post to the NCI, post to the retained earnings, post to the other. I love balance sheets. And the reason I love the balance sheet is that order, that structure, that routine, that repetition. Of course, there's always going to be tricks. Step acquisition, sub-sub. Yeah? If you have a sub-sub, you've got an indirect holding adjustment. You've got a step acquisition, you've got a revalue and get the gain on the first investment going to profit. There's always a trick, but there's that structure that takes you through the question. We haven't got the same with P&Ls. I now want to talk to you about doing a group profit and loss account. In my heart of hearts, I now think this is revision. You don't think it's revision, but I'm thinking it's revision. Because I'm thinking, effectively, we have already understood and we have already come to terms with what's involved in group accounts. But we've looked at it through the prism of a balance sheet, and now I've got to try and make you look through the prism of a P&L. And that is just a slight shift rather than a total change. When you do a working, you're going to have to think. When you do a group profit and loss account, you're going to have to momentarily think. You've got to think of a takeaway. When you are starting a working, you've got to think, why am I doing this? I will never do working 5 retained earnings because I'm not needing to do retained earnings on the balance sheet. I will never do working 6 other components of equity because I never need other components of equity on the balance sheet. I will never do working 4 NCI because I will never need NCI on the balance sheet. What am I doing? A group profit and loss account. And in a group profit and loss account, there may be a need to do workings before you embark upon the process. Why might you do net assets? Why might you do net assets? Why might you want to work out the net assets at the date of acquisition? What might be the reason for that? We're jumping ahead. I'm keeping it really simple. One of the reasons, what we did when we did net assets, we often found a balancing figure in net assets. What was that balancing figure? Fair value adjustment. And then what happened on the fair value adjustment? Depreciation. And in a group P&L, we're trying to find extra expenses. So I would be happy for you to do working to net assets at acquisition, because you're therefore finding out the fair value adjustment, and you're therefore finding out the depreciation expense. That is your takeaway. That is why you would do the working. Don't do the working because you always do. You don't always do. In a balance sheet, you always do. So you don't even have to think in a balance sheet. You just do. In a P&L question, you are momentarily having to think. Why might you work out goodwill? You don't want goodwill. You don't want the asset of goodwill. In a balance sheet, you always need the asset of goodwill. But in a P&L, you would only want goodwill if impairment loss. So you'd be doing it in order to work out an impairment loss. That would be your takeaway. That would be your takeaway. What other workings might you get involved in a group profit and loss account? There might be a disposal of a sub. And therefore you would have a gain on disposal. If you lose control of a sub, then there is a profit or loss on the disposal of a subsidiary. You would need to do that calculation. If you've got an associate, you might have to do income from the joint venture, income from the associate, and that means that you would use equity accounting. You would have a single line. So, not every question has an impairment loss. Not every question has a disposal. Not every question has an associate. So you would have to pick and choose. Let me give you another one. Let me give you another working you might have to do. You might have to do the group exchange difference. Yeah? The group exchange difference, which would go to OCI. Because if you've got an overseas sub, if you've got an overseas subsidiary, then the nature of an overseas subsidiary is that you are retranslating the net assets, retranslating the goodwill. The exchange difference on the net assets and the exchange difference on the goodwill are recognised directly in equity. They appear in other comprehensive income. If they appear in other comprehensive income, you've got to work out that group exchange difference. Now, as a class, we've worked out exchange differences. As a class, we've dealt with associates. As a class, we've dealt with gains on disposals. As a class, we've dealt with impairment losses. As a class, we've dealt with fair value adjustments. So we're taking this knowledge that we have already, and we're just applying it in a slightly new context. I think there are some things which may not need a formal working that we can just kind of rock and roll with and adapt with and deal with on the face of the profit and loss account. One of those is time apportionment. If you have only had the sub for 3 months of the year, if you've only controlled the sub for 3 months of the year, then in your profit and loss account, you would only bring in 3/12 of turnover, 3/12 of cost of sales, 3/12 of distribution, 3/12 of admin, 3/12 of finance cost, 3/12 of tax. You wouldn't need to do a separate working for that. I would suggest that is a presentation on the face of the P&L. The same is true of a translation of an overseas subsidiary. If you had an overseas sub, all the figures would be in dinars, all the figures would be in crowns, all the figures would be in shillings, all the figures would be in the presentation of the functional currency of the local business. but you would have to translate it into the presentational currency of the group. And in the profit and loss account, please get this right first time. In the profit and loss account, when you are translating the income and the expenses, they are all translated at the... Oh, is he talking to me? Right? You've got an overseas stuff. Now, this is something that your examiner's never done. He's never set a 35-mark question with a group P&L where one of the subs is an overseas sub. I don't know why he's never done it. But if you have an overseas sub, then you've got the turnover in dinars, the cost of sales in dinars, the admin in dinars, the distribution in dinars, the finance costs in dinars, and the tax in dinars. And we will need to translate those figures across into dollars. What rate do you think we should use to do the translation? Income and expenses will be at the average rate. Yeah, average rate. You can't do it at spot because that would be 365 different spot rates. I mean, it's a nice idea that turnover would be at spot. How does that work? I mean, so we have to use the average as a practical. So the translation of the overseas sub, this would be translation at the average rate. This would be the translation at the average rate. You would eliminate any intercompany sales, any intercompany cost of sales. You would eliminate any intercompany sales, any intercompany cost of sales. You would also have to eliminate any intercompany dividends. Yeah, any intercompany dividends. Right. I am going to repeat everything that I have just said since we have come back from the break. Question number 1 in the exam is a compulsory number crunching 35-mark group accounts question. It is normally 5 times out of 7, 4 times out of 6. It is normally a balance sheet. Balance sheet, balance sheet, balance sheet, balance sheet, balance sheet. Occasionally, it is a P&L. And when it is a P&L, most people don't like it. But I think P&Ls are okay. Because I think all they are doing is re-examining the same issues, the same principles, the same ideas, just in a very, very slightly different context. Just like you cross-cast assets and liabilities, you cross-cast income and expenses. Yeah? Now, when you're doing a group profit and loss account, group OCI question, I've already recapped with you yesterday what goes in the OCI, so that cuts out that little story here. Oh, remember the OCI. Oh, remember the items that go in the OCI. Well, we did that yesterday. So you'll do your workings for a reason. Net assets to find the fair value adjustment, to find depreciation. Goodwill to find out the impairment loss. There could be a disposal, there could be an associate, there could be a group exchange difference. On the face of the answer, you're mucking about, you're crunching away. On the face of your answer, there might need to be a time apportionment process, a translation process, eliminating intercompany items, yeah. And you've also got to work out the NCI attribute. No great theory. Yeah, we've done the theory. No great explanation. We need to do a question. We need to do a question. And there's a couple of questions in the material. I think I will choose to do the more challenging one in class. And that is the question of Sun Yat-sen. Sun Yat-sen. My page number is 326. said, is on page 183. So page 183. Okay, 2 minutes, 3 minutes. Yeah. You know, the exam has changed. You know, the reading time that you used to have of 15 minutes has been taken away. So you just have 3 hours and 15 minutes to do the exam. So you can actually start the exam straight away, but so it's become a 3 hour, 15-minute exam. So you can actually write in the 15 minutes, yeah, that's okay. But I still always think you need to read. So a couple of minutes, you read. A couple of minutes, what's the question about? How is it structured? What's the information that I've been given? What have I not been